Good morning, everyone. Happy Thursday. Welcome to the Metal Markets. I'm your host, Market Stalker D. If we're meeting for the first time, I've been a commodities trader for almost 20 years at this point, and I focus on precious metals, base metals, but also energy futures as well. I am wearing my silver blazer, which could only mean one thing. I traded silver. It was a reversal for the Shanghai last hour this morning. I woke up pretty early, and let's have a look at chart executions. So the biggest part of this P&L comes from one silver trade. So I entered right after the big shakeout, after sort of 6 a.m. and then I did the classic fade into the part of the day just before London Open. So those 2 hours brought a nice reversal back up to the pin. So the pin in the options chain is still very double-sided, sitting at 85 evens. So not probably not the best area for getting chopped up, so be very careful there. But yeah, so basically I sniped it from just underneath 81. Time of day was the primary factor for that particular trade. And then I ran it almost to VWAP. When it got pretty close to it, I closed out the position and got myself a nice sort of 500 tick trade to start the day. That's not an everyday thing for me. I think that silver is pretty volatile still. And I did run it on a pretty tight stop, primarily because I saw that they were plowing into that reversal. So I was able to minimize the stop loss quite a bit. And that obviously brought a massive risk reward on the trade purely because of the volatility. And now I'm just sitting and waiting to see what is happening. Now let's have a look at gold and what gold is doing in the options chain before we move on. So another thing to note in silver is the put call premium ratio is kind of flipping from 108 to 151, and this could indicate that there's some buy put going on, downside protection during the sell-off that we've had. But those puts are still there, so you could read that as the larger traders, so institutions, that they're not sure that the bottom is in just yet on silver. Just one interpretation, right? So yeah, I don't know whether I'm going to be trading silver during COMEX because it is quite annoying for me. So for me, the better time of day for silver would be either at the beginning of the Asia session, so an hour after Tokyo initial balance. So you wait for Tokyo initial balance to end, and then you maybe, if you're awake during that time, maybe you can try sniping some trades. However, be careful of that 85 level. It is very, very double-sided. Like, both calls and puts are pretty even in number, and that means a lot of pivoting action, chop, not smooth at all. Alright, moving on to gold now. Let me just find my analysis here. Gotta scroll through all 4 things that I was looking at today. Alright, so gold. Obviously drifting lower from yesterday, but the implied volatility is compressing. So yes, it went slightly lower than 5,200, which is also at least a similar thing in silver, right? So you have 5,200, which is very similar to 85, double-sided open interest on the calls and the puts. That one wouldn't be like my choice of trade location if I can help it, because it's like push-pull, tug of war, right? And even though eventually they did turn it around during Asia, COMEX is so volatile still that it could be a problem. At the moment, we're sitting right above the previous day's COMEX value high, so we are slightly above that distribution curve. If we open inside value, that would be a bit of a tricky situation, because whenever something opens inside value, it indicates that the prices from yesterday are accepted, and therefore it brings a lot of possibility of range-bound days. And range-bound, you know, in a situation where gold is moving, you know, over 1,000, 2,000, 3,000 ticks a day, how do you manage risk? So again, huge caution. We still have a lot of headline risk happening. Gold is generally impacted by headline risk, but which way, that it depends on the news. So once again, you need to keep an eye on something like Financial Juice or another squawk service somewhere, just to make sure you have a pulse on the headlines. It doesn't mean you should trade it, but it can provide you with a little bit of a context of what sort of a day we might have. Is it risk off? Is it risk on? Or is it just not really reacting to the development? So usually when you have big movement is when a new piece of news comes in. And of course I'm talking about the conflict in the Middle East. And then maybe that might be able to push it either side, but it's in a precarious position, still stuck in, you know, the range that we've had from yesterday. And until that changes, yes, there might be opportunities, but I really don't want to see it fall back into the value area. All right, so then the next two trades that I did this morning were on crude oil. Both were on much smaller size. It started with 3 micros, added up to 5, sniped 1 R to the downside. I couldn't really hold. I actually had 75 as a target, but I had to go deal with one of my dogs, so obviously I couldn't watch it. And crude oil is quite volatile, so I didn't really want it to ping me back like to the highs. So I decided to just take an 85 tick, roughly 1 hour. And then after I dealt with the dog, I saw that it was touching NYMEX TPO value high, where we also have settlement, NYMEX settlement from yesterday. It started bouncing from there, so I entered yet another 3 micros, again added up to 5, and then it started pretty quickly creeping up to VWAP, and I took it right under. So again, very similar trades, you know, kind of mean reversion down to VWAP, mean reversion up to VWAP from relevant areas at a pretty decent time of day. We're going to see if we can get anything else, but I would like to see maybe a neutral day type being created on crude oil, which does mean we could test the Asia high. Asia was pretty lively on crude oil, but because I wanted to catch up on some sleep, I did not trade it overnight. I didn't trade anything overnight, so I did that silver trade in the morning instead. But again, crude oil seems to be much smoother overnight. Don't know why that's happening so frequently in the last 2 years, because normally Asia was super quiet on crude oil, but now it seems like everybody has gone back to trading it and Asia has joined the party. So maybe there's some value in plotting the Asia high, Asia low, maybe even London low. So basically whichever session created the highest high and the lowest low in the overnight. So let's do that just to have that on the chart. So that was Asia high, And then because London low went lower, that's pretty much at 75. I don't need yet another point of reference. Just one thing, whenever I see a cluster of things happening around the same area, so we have TPO value high, very high probability area for a bounce. We have the moderate call wall, which has exhibited a lot of pinning action. And we have ADR low. That tends to be a bit suspicious to me. It's like, that might spell trouble. Another thing in crude oil is that yesterday we had the inventories report, and usually on the day of the inventories it's a bit of a, as Hogue likes to put it, nothing burger. But the following day is when you usually see movements with that macro side, and that's probably because, you know, the CTAs require some time before they adjust their positions. You know, they may not be adjusting their positions exactly, right after the inventories, but they do it the next day. So remains to be seen what they want to do with the 75 level. If they overshoot and then reclaim, that means that 75 pinning action is still in force, so I wouldn't necessarily fight that. But at the same time, if we start to fall towards the value area and we open up COMEX pretty close to it, sorry, not COMEX, NYMEX. So we open up the NYMEX session very close to the value area. There's always that danger of a value acceptance and a further move down. Another level of interest is still that 72 area. Don't know whether that's still GEX2. It could be something else today. So it's still a pretty strong open interest level. And I've noticed that suddenly we have a lot of exits in the options activity from people who were long from 60. So they have started to close out positions, taking profits. That could also cause some bearish activity in crude oil. And is there anything else that I was looking at? Let me just... MFIN Mooner, does crude open at 9:30 Eastern or 8:30? Neither. It actually opens at 9 a.m. Eastern. It's a NYMEX exchange, and it runs the initial balance from 9 a.m. to 10 a.m. Eastern. That's obviously 8 a.m. till 9 a.m. Central. And if you're over in the UK, it's from 2 p.m. till 3 p.m. for us. So if you're trading crude oil, or gold or any market that has different hours, please familiarize yourself with the old pit hours, because we still have a lot of activity that starts at that time. And for example, back in the day, the pits for metals were, for COMEX in general, were opening at 9:20 Eastern, 8:20 Central. And these days, it's kind of tricky to anchor profiles to 8:20. It's not like impossible, but everybody just uses 8:30 as a start time. That's Eastern time. Is it Eastern time? Yeah. So Eastern 8:20. And then Central will be 7:20, so pretty early. It's probably one of the earliest exchanges that starts trading. And even though everybody's moved to electronic trading, those old pit hours are still the times of day when a lot of institutions start to either unwind positions or enter new ones. So you really need to know the hours of the product that you're trading. I'm kind of surprised sometimes that people are grappling with a new product and they don't even know, like they don't do any research on when the product is actually opening and closing, like when is the settlement as well. Settlement also varies, right? So metal settlement is going to be early, and then you have NYMEX settlement an hour later, and then you have the New York Stock Exchange close, and then you've got Globex open. So please familiarize yourself with all of that. We don't want to be rushing into markets that we know nothing about. I'm just going to remove these chart executions because they're kind of cluttering up the place. But yeah, so now I have to wait for more relevant levels to come in. Yesterday or 2 days ago, we had that really nice level in crude oil, which was 77.50. So I sniped a scalp short initially. Was slightly late on that. And then later on in the day, I actually took a really nice short as a continuation of that move. Rejection from 77.50. And yeah, so crude oil is definitely back on the map, for now at least. Even though yesterday was a quiet session. So what we're looking at area, like value area wise, when it comes to the size of it, it is much smaller than it has been in the last several days. Now here you have the volume value. I had the TPO value high, a little bit higher than that. And that's the one that I usually reference. Even though the value area can be pretty good from volume value, I just don't see it as relevant unless both the volume value and TPO value are pretty much within a few ticks of each other. So if they have this kind of a difference, I will then take the TPO value over volume value. It's just personal preference, right? I know that I've back tested the TPO values to death and how it behaves and where it is. Whereas with volume value, I always find that it's slightly wishy-washy for some reason. I don't know what the reason for that really is, but I prefer the TPO value. However, the volume value can still provide a context. And, you know, when you look at the size of both of these, they're very similar. It's just that one of them is ever so slightly lower than the TPO value. Don't know whether that's going to be relevant for anyone, but it is what it is. Joe Watson says, do I review account performances? I have done in the past. I mean, if you want me to review it, we'll probably, because you guys, unless you're moderators, you can't really post links. But maybe Bruno can jump into one of the Discord channels on Topstep, and you can submit your performance there, and then I can have a look at it. But yeah, we have done that. I don't do it every week, obviously, because I don't want to do like public flogging all the time. But yeah, Joe, if you're up for it, I promise I'll be nice. Constructive criticism rather than flogging, which is something we get on Shoulder Tap a lot. And you know, it's not easy. I was never really a big fan of like, I love Mick, and I do think that he provides a very valuable insight into traders' activity. But you know, especially if somebody's like in a drawdown and they drag out the stats and they're like, yeah, you've done like 42 days of daily loss limit, so this person, you know, maybe you want to, and it's like we know, right? We're already, if you get yourself in a drawdown, you're already beating yourself up over it, and then they put like public the public flogging moment. And sure, sometimes they're very nice as well. In the past, they've been very nice to me. And then one time I lost a crude oil trade in like 3.5 seconds after I was up. I think I was up like $1,000 on it. And some piece of news came out and I was long. So naturally crude oil sold off massively and just took me out of a trade. That was it. And I don't really trail my stops very frequently. Now with this new way that I'm doing things, I am trailing crude oil. So I did some analysis on this new volatility and whether there would be a safe trailing stop. So basically what I do, I enter with 3 micros, add 2, and then once that new average is over 50 ticks in profit, I will only trail the 2 add-ons, not the whole position. So that way I'm still kind of keeping the the downside fairly controlled. But you can't do that on some products. Like if you try and trail silver, I've done Monte Carlo simulations. There is no way to trail it properly unless you got like super lucky on a move or something and it went. But it just wags around so much that by the time that you can safely trail it, you're already like over 200-300 ticks in profit. So it's like, well, what is the point then of trailing? So there are products where I won't trail, but crude oil, it looks like over 50 ticks in profit seems to be okay for the trailing. But I still don't want to trail all of it. If it continues to go higher and it just retests my entry, I still want to have something in the game. So, just something that I've been working on. If you can derive value from that, that would be awesome. All right. Let's have a look. How many contracts on silver trade? Would you believe it? It was only one. $2,500 on one single silver trade. So that's usually how I like to do things. As everybody who's been here before knows, I'm not somebody who will do like 100 trades a day. Because I'm scaling in more, usually you will see me like, oh yeah, you've done like 20 trades or something. But it's actually 5 or 6, and that's across different products. It won't be just like on one product, me scalping away. Sometimes I scalp, especially like if I see that it's a range bound day, there's just nothing else to do there, right? So you have to take smaller chunks of the profit. I don't stick to like high risk reward do or die. It's not something that's a part of my trading system. So my risk reward is scalable depending on what kind of a market context we have. If you have a range day, me shooting for 6R or like a million R multiples, it's just not a good way to be, right? So I will diagnose a chart to the best of my ability, and then I'll be like, okay, well, do we have a bigger swing trade here, or can I just take a tiny chunk and then sit on it until the other side of the rotation comes in? When I'm doing range bound trades, typically that will be a 1R situation for me, but I won't scoff at like 0.8R and 1.2 on range bound days. I'll take that. I don't mind taking 20, 30, 40 ticks out of a scalp at all, but I will never ever take 5, 3, 10 ticks. To me, if I do that, that's a losing trade to me. I don't care that I've made money on it. It's a losing trade for me. Why? Because it does absolutely nothing for my expected value over time. That's what I shoot for. I don't really care what a one trade does. Even one day doesn't really mean much to me. It means to me, what does this particular hit rate and risk reward do long term? 6 months, a year, 2 years, 5 years, 10 years. And when you smush all of the good times, bad times, terrible times, stellar times, when you think you're God, right? You're like, well, can't do no wrong. All of that over the years, now I have, accounts that have gone for that long, but most of you are in multiple accounts blowing up, then getting some payouts, then blowing up again, then getting some payouts. But have a journaling platform where you collate and aggregate all of that and see what sort of an overall risk model you're working with. I know that prop firms do allow us to have very low risk by just purchasing combines, and then any payout that you get, it's amazing. So some people just look at that as risk. But every prop firm that I'm seeing recently, they're all trying to push people towards one single live account, and that will be the future. So if you don't prepare for that at some point you will end up in a live account, or even in your own account, opening up your personal account. You can't blow that 10 times over and then, have one period of a week where you kind of do well, because all of those losses and blowouts that you've been doing on prop, that's not like you have a finite amount of cash to play with in your personal account. So, the closer you can get to sustainability over time, the better your mindset will be. And I don't know how long, to be honest, we're even going to have sim payouts. The way things are going and the way everybody's changing rules, there could be a day where sim payouts are basically stopped by the regulations. They're not very happy with us paying people out of demo accounts. Oh, performance-based. Yeah, it's performance-based, but people are still getting real money out of demo accounts, which is Twilight Zone stuff, really, for me. And that's only been in the last sort of 5 years. That was never a thing before. In the first iteration of Topstep combines, and I've been with Topstep for over 10 years. I was their first female trader back in 2015. So the first combine was you pass a combine, then you go into step 2. That's very difficult. If you pass step 2, they would just put you in a live account with $5,000. There was none of this like, oh, let's go to 30 max, or let's go 100 grand. None of that. It was like everybody was getting just a $5,000 account. That was it, live. So every time you would put a limit order on your chart, you would see it in the dome because you would be a part of the live market. The orders would actually go to the exchange. Now people are complaining that Topstep is giving out up to 30 grand in the live. So anywhere from 10 to 30 grand, that would be a starting point. And that's a pretty good starting point. But, now we're used to incredible amounts of cash, and that's both a great opportunity, but it also got people very used to full porting, getting lucky, doing a whole bunch of dodgy things to get to very large balances very quickly, blowing up a few accounts, and then having one or two that hit, and then they're like, oh yeah, look at me with my, $200,000 payout. It's like, great, but we're not talking about how many combines you actually blew to get to that payout. And as we've seen recently, the expenses required to get very large balances usually involve a lot of expense on blown up accounts. So the prop firms went down the route of trying to stop that, because technically that is trying to game the system, right? You go large and then some of them hit, others don't. When in the world could you do that in the live account? You couldn't, right? But it is what it is. That's the name of the game now, and that's how it is. And prop firms are putting a stop to it now. So the gravy train of blowing up and then hitting on some other accounts is probably going to come to an end at some point. So all of the stuff that we're doing educationally, we're trying to show people how to trade sustainably. So not going full porting, not trading way too much size. And to be honest, if somebody trades like 3 crude oils, like 3 minis, I would argue that they're playing with fire. 1 micro silver, that's also playing with fire. So I touched the stove today, but it worked today. Does that mean I'm now going to start doing silver trades in any kind of XFAs that I get as a result of this? Because I'm getting quite close to passing this one. No. Absolutely not. Like, I'm not going to touch silver in the XFA. Like, are you joking? So we're going to go back down to, micros, micro copper, micro crude, and just chip away until we have enough balance. So, be sensible, please. Amar is saying, hi Dee, hope you're doing well today. I'm doing okay, thank you, Amar. Hope you're well. And Amar is also asking me, is it possible for me to analyze DAX? Yeah, we can show DAX. Obviously, I have to go to a different platform. I haven't done any recent levels on DAX because it's still kind of doing the same thing as it was done. And I'm sorry about the white charts, but I am an older person. So here's the DAX mini. We've had this area where we're seeing again that pinning action, right? So if I scale out a little bit, every time we go below it, market finds an anchor again, and the 24,323 area is still exhibiting the pinning action. We've had a bit of a sell-off. The gamma flip is going to be somewhere different, and the DAX has been pretty strong. Like when I look at how the CTAs, the commodity trading advisors, are positioned, they're still positioned pretty strongly in DAX. That's not the case in NASDAQ though. There's been a little bit of unwinding of positions for some reason, probably because the AI boom might be going through a bit of a cool-off period, so that kind of makes sense. But if we look at the DAX chart here, we opened up inside value. It tried to go higher, ran into that pinned area, and now we're failing the auction again. VWAP, as well as this 24,123 area, is a pain point because you might see a bounce from there, so don't expect a full failed auction. And also, whenever the initial balance extends into a normal day type, basically around about the same size of extension as the initial balance size, that tends to be a temporary top before it basically starts to fail the auction. But then DAX very rarely does full short rotations through the initial balance. So I would expect to see some sort of buying stepping in again at some point. I don't have a clear level on it, so I'm kind of staying away, because on an inside day you can expect responsive activity. What does that mean? It means that we may go down to tag this ADR low, which is currently sitting at 23,960 roughly. And that would also be slightly below yesterday's value, meaning that the market makers, dealers, they might try and hedge that and bring it back into a responsive activity trade, where you effectively get the pullback into the value area and just kind of drifting up and down. So effectively a range-bound day, right? So out of all the equities, DAX is still pretty strong. The ADR high can sometimes be a pretty good level if the time of day matches. That's sitting at 24,450. And again, you can get these levels on DAX from our utility Discord server, which you can find on my own channel. If you click join, then that gives you access to that. And then you can just plop those levels wherever you want. It's not platform dependent at this point. But we just wanted a way to kind of get these levels on 12 different products that we support at the moment. That would be DAX, NQ, YM, ES. Then we have I didn't do Russell because, again, I don't think that there's that much interest in Russell, even though Coach Jay is doing absolutely amazing on it. So maybe I should consider 13 products. And then from the commodity side, on the precious metals, we have copper. Well, that's a base metal. Copper, gold, silver. I think that's all the metals that we do. And then you have the energies markets, which is natural gas, crude oil, heating oil, and RBOB. So those are all the markets that we provide average session ranges and also profile levels for them too. Something to think about. All right, let's have a look at chat. I think we have some other things. What is COMEX? COMEX is a former pit where metals were traded, and yes, it is a US exchange. The pits are no longer in existence, but the hours remain. So the hours are still very much the same. You will see a lot of volume stepping in the closer we get to the COMEX time, which will be, let's say, an hour and 20 minutes. Let's say hour and a half, because I just used the bottom of the hour for the start. We do have LME, London Metal Exchange, that trades copper. So let's also have a look at copper. Copper has actually seen some unwinding of positions yesterday and overnight. But today they seem to be using this sell-off as a potential to buy more. Seasonally, copper can go up for this time of day, but on the weekly chart, it's still all like really, really range bound, just like barcode, right? Scan it and check out. What is happening? So until that range breaks the large time frames, apart from the fact that it is a range, it's not going to be anything particularly relevant. So just like a little bit of a context there. Daily chart, we have a flimsy little demand here that is sort of reactive, but also not, because a lot of pops into it. No dedicated movement away from it. I mean, look at this pathetic little attempt at taking it higher. And today that's failing for now. Like what COMEX does will be very relevant, and I'm going to be looking for the post London close trade to see whether I can maybe jump in on some longs, just like the CTAs are doing. So just being on the side of the larger institutions that are seeing this area as a potential to buy more. Let's go back to the intraday time frames now for a little bit more better view. ADR low is about to arrive just above this level at 580. Now today 580 represents something that Mentor Q calls GEX3. So there's a pretty, there's enough open interest there to be a potentially a rotation area, but it's not like a massive mega call wall that is like, yeah, definite hedge. The negative gamma today on copper is also in force, so the gamma flip is actually not too far, so we've just dipped into negative gamma. Whether that stays remains to be seen, but the gamma flip is at 84, so 584. Let's put the little dotted line there. So just above this Asia low, and we are going to take that white. Just putting the proper coordinates. It's all going to be a little bit smushed here. So gamma flip. If we reclaim 84, that will be again a positive gamma, which means that the dealers will then have a stabilizing effect. So as you're stepping in from 84, which is a gamma flip going up to 590, they really very likely will hedge there. Back down, that is the mean reverting price activity that has a very big stabilizing factor, especially in copper. If we go higher than 590, that will indicate acceptance of prices from yesterday. Yesterday's COMEX value area was pretty small comparatively, but the mean reversion to value still definitely remains an option. A little bit later on, I wouldn't really look for that super early because we do have to maybe tag this 580 and the ADR low before it turns around. The breakdown of the ADR low in 580 would bring 575 into consideration. Now the gamma wall for today has actually shifted back up, which again speaks to some, because this was the gamma wall from yesterday on copper. It's shifted to 608 in the end of day snapshot. So way, way higher. What did I do there? I just lost that. So it's because it was 608, not 508, D. Jesus Christ. Okay. Gamma wall. So what does that mean? It means that it's got a lot of open interest there. But we do have a strong wall, which is still magnetic at 6 even. So if it starts to kind of track higher, we have Asia high that was created at 595.20 and ADR high just there. Now, if they get all the way up there, I wouldn't be surprised if they smack it into 6 evens and then start to reverse. Because if I look at where some of the smaller options lie, in between sort of 593 and 6 evens, there's really not that much in the, like everything's super thin there. So you have a nice big sort of range all the way from 593, somewhere in this area, all the way to 6 evens. But obviously we have Asia high. Now Asia is the one that does the price discovery on metals first. So wherever they turn around, that should be an area of orientation for you and a potential again for another fade if the time of day is right. So let's hypothesize that we do have a mean reversion, we accept value, we start to track higher, we get to Asia high, ADR high, and then we get to the London close. So what is the expected move from there on out? Another breakout? Statistically, no. Statistically, that is the point when we've already went way higher and, you know, built up momentum. That's all very well. But now you're coming into the time of day when people are getting ready to close out positions. So what's going to happen? Well, the bigger the move in the run-up to those times of day, this is why I say time of day is a level, the more chances are that you've missed the boat entirely. So then it's actually better to shoot for the reversal. But the move has to be pretty significant. You know, if the move starts from, like, let's say today we didn't fall, but we kind of drifted in and around this value area, then it sort of pops up and gets up to that area. Yeah, they might run it all the way to 6 evens. But in that case, I will be looking for the last half an hour of COMEX and maybe right after COMEX for that fade. So time shifts depending on the size of the move that happened previously. Does that make sense? Right? So I will take it as a context. If we have a big run up, where it's coming from, how much of the average daily range did we traverse? And some of my strongest setups are on the days when ADR high and Asia high are matching. So that would be my area for potential sells. Are we going to get it? Maybe not. We might not get it, but that is where the high probability lies. And in fact, I would say if we start running up early in the day, all of this is actually game. And I would expand my selling area to just above the ADR high, but straight into the next magnet area from the options chain, because that's where I would expect to see hedging. So hopefully you can see that it's like a story, right? So you have different instruments that are all contributing to the symphony of the markets, so to speak. I'm a former musician, so I like to look at things in musical analogies, but that's how I like to look at it. Each of my conditions, so whether it's a gamma level, whether it's a value area, whether it's a statistical average, all of that has to match for the time of day expectation that I'm looking at. And I'm almost always looking at fading the moves. The only time when I won't do that is if we end up in a clean extension of the initial balance to one side, and then it just keeps going and keeps going, and then creates multiple sets, at least like 2 sets of single prints behind. That's the time of day where I need to put my mean reversion D in the corner and tell her to be quiet until the next day, right? Because it's an outlier day, and on those days you don't want to be fading directional moves, especially if they're with a larger trend. So if it's an uptrend in the metals and it just keeps going, don't fade that. Use any pullback to, like, let's say we have a huge trend that starts in gold, right? So let's have a look at gold. And we go above 5,200 and we stick above 5,200. No selling wicks, no nothing. It's just like clean momentum build through the gamma wall. At that point, we will be looking at 5,200 as a potential pullback and continuation. And that's also the time of day when you can grab some of the smaller levels from Mentor Q, anything that's around there, GAX 4, GAX 6, GAX 7, GAX 8. Price runs through it with the trend, then retest the nearest GAX level, see whether they're continuing. And in gold, those continuations, if you have bookmap, are frequently sweeps in the direction of the trend through the GAX levels. That's what you'd be looking for. So maybe a pullback and then a slight overshoot, but eventually you have to keep running through those levels, using them as support. That's how I approach trending days. And, you know, to me, I had 2 bigger pain points. I had, like, this was many years ago, range trading was such a weakness of mine. And yet over the last 8 years, I've gotten a lot better at it. And now I don't mind it. I still think it's very labor intensive. But I can make money on a range day. And, you know, go back 8 years, and that was not the case at all. I was like, inside day, neutral day type, oh no, oh no. And then the second pain point was single direction days, where I'm like, I don't know how to get into this. This is horrible. But then I started looking at the smaller GAX levels, and I started noticing certain patterns on bookmap, and I'm like, oh, I see what you did there. And since then, I'm actually pretty okay with single direction days, but only if I'm very objective. They're still a bit of a pain point, I'll be honest. And I have to really go into my critical self and go, all right, objectivity, D, objectivity. Do we have multiple sets of single prints? Where are the GAX levels? Did we run through multiple GAX levels? Are we sitting at a day where we overshot ADR high and we just keep going, right? Those are the times of day when I have to be super careful with myself, because my natural inclination is to do a reversal. It's like, you don't want to be doing that, you know, so you have to come up with, you know, that's your problem getting into the trending days. Consider some more elaborate orientation points in order to keep you out of trouble. That's something that's helped me a lot. Where do you find the old pit hours? I'm pretty sure you still have that on the CME website under specs or something. So you will have the, I think they're called the TAS hours or something. So just go into the specs area and you will have like the active regular trading hours on there. But I do think they call them TAS. I don't know what it stands for. Don't ask me. I could look it up, but I can't be bothered. All right, USA changes time this weekend to make it more confusing. When does London change? End of March. So yes, this for those of us who are in Europe, this show is going to be running an hour earlier because obviously I'm running the show so close to the daytime show. The show of the metal markets, the time of the metal markets cannot change. So I have to go by the US hours. And then we go back to normal after 3 weeks. The 28th of March is when the UK goes back, but it's also going to affect Tokyo opens and closes. Why? Because of the time change in the USA, Tokyo doesn't have daylight savings. So they keep the same time year round, which means you're going to have to use a time zone converter to see what time is it in Tokyo and in Shanghai, and then adjust your Tokyo initial balance to make sure that you are using the right time of day. It's a pain, I'm not gonna lie, it skews everything. So my approach on the first day, so next Monday, I am probably going to sit out Monday from trading completely. Why? Because I would have to change the value areas from the previous time zone and then look at what the new open and close are, and it's just like, oh god. And as somebody who's very data driven, that just puts a wrench in the works into every piece of data you have. So now suddenly London close is not at that time. Now suddenly London close is this time, but the post NY cut is going to be earlier. So instead of 3 p.m., that's 2 p.m., but the London close is still like my time. And it's like, So yeah, very, very challenging 3 weeks coming up. And I'm going to be super careful. Like if I'm not even sure I want to start trading XFAs during that weirdness. So maybe I'll just leave it until April and then go and focus on XFA trading for April, May, June. And then we're going to have to be again careful because the summertime, there's a summertime sadness when you have the liquidity dry up. Technically, it starts to be very obvious towards the end of June, but it doesn't really take full effect until mid-August, and then everything just goes dead. Now, obviously, we're still going to be streaming, but there's going to have to be a lot less trading for the summer months. So just be very prepared for D to be talking a lot and not trading a lot. However, those of you who know me from the Eurotrade, you know that's the case anyway, right? I don't do 1 million trades per day if that's what you're here for. Sorry to disappoint, but I have to follow my plan. And if I have some setups, they will be maybe on crude oil. Maybe sometimes we get something a little bit earlier on copper. But most of the time, we have to be very careful with that overlap time of day when the probabilities are a little bit sketchy. The only probability that is super strong is if crude oil does a single-sided extension of initial balance upside, then usually a fade during this time of the day, so when the stream is running, that can be our high probability setup. Metals, very sketchy. Mean reversions have generally a larger maximum favorable excursion, but when I look at continuation versus mean reversions for this time of day, it's like borderline 50-50. It's like 47 and 53%. So quite terrible. But the volatility starts kicking up. And that's kind of when you start to realize what they're trying to do with it. But the true high probability setups, they will come a little bit later in the session once the madness of the COMEX initial balance is out of the way. However, sometimes in gold, if we reach one of these moderate call walls, it's not like a double-sided pinning action. Maybe if we were up at 52.50 for this time of the day, it's absolutely up for grabs because that's an area where they will hedge. So it's going to be very contextual depending on where we are. If it's a larger level, we trade. If it's not a larger level, we stay out. It's very simple in theory, right? Not so simple in practice. Because like, I want to trade. But also Pete the process parrot, which I always keep here. Let's get him out. Pete the process parrot is always watching at me. Always watching at me? Always looking at me from one of my screens and going, are you following your plan? And then Pete gets very mad when I don't follow my plan, and it tries to peck at me from above. It's very painful, you know. This is my trading buddy here. In case you didn't know, I like Muppets and puppets, so there's that. Alright, so we're getting a little bit of newsy type activity in crude oil. Why am I saying that? Because it started jumping around like a yo-yo. That's usually newsy. So let's have a look at Financial Juice to see whether we can do something here. Let me open up that Discord channel to see whether Joe... I don't see anything posted by Joe. So Joe Watson, if you want the stats to be reviewed, this would be the perfect time while I look at what the hell is happening in the news section. Let's see. 1203. That was a while back. That's probably not it. But temporary presence of U.S. aircraft has been authorized on certain French bases on a temporary basis. Okay. Just before then, Iran fires new wave of missiles at Israel. Oh God. Okay. And yet it was signing off. Yeah, so let's just wait to see whether something else has happened. Oh, hold on. There's another thing. No. So I don't see anything obvious. Nothing obvious yet. Maybe we get the news, but for now, that they seem to have stepped in with quite a lot of selling potential. This is coming straight from the initial balance low. We tested initial balance by about 50%. That's not unusual. So this is sort of a setup that might be turning into a weeb setup. What does that mean? Weakness inside initial balance. It basically banks on a pullback into initial balance, usually about 50%, and then reversing from that and continuing to go down. But until this candle actually closes below VWAP and actually closes strongly below the initial balance, the setup is not on. Because anytime I see something jumping around like a yo-yo, I need a slightly bigger time frame in order to put any risk on. What was I going to do? I was going to put the horizontal ray. So this was London Open. That's your initial balance high. This is your initial balance low. And you can see the pullback by ballpark about 50%. My voice went flipping there. Very high. Been possessed by Pete the Process Parrot. Pete wants a cracker. Pete wants a cracker. Purple Tip says the funny thing is probably 80% of people here. This means absolutely nothing to and never will because they will never be profitable. Oh, don't say that. I mean, if you look at some of the more reputable companies, I know that people ending up in live accounts in Topstep is like, those of us who have done that, it is like 0.1%. But people who get payouts, they are still, like some people are like, oh, 97% of people have fail. But what does that mean? Like, does that mean you've never received a payout? And are your expenses maybe paid out from that payout? I don't know. I would say that looking at some of the other firms that have more of a, not prop firms necessarily, but like something like Darwin X, for example, I don't really support their model because they're trying to do like institutional investing and then giving the traders absolute peanuts. So I'm not, and they're like CFDs. So I think they have futures now as well, but I don't know, the whole concept is a little bit iffy to me in general. However, if you look at their stats, they actually had stats where 69% of people fail and 31% of people are profitable. I think that's probably more realistic. And the failure of prop traders is purely because every single person is looking at this as a YOLO game. But as the rules continue to change, so will the attitudes of the YOLOers. When you have things, I know that people say, "Oh, Focus Trader Program (FTP) is so horrible." Yeah, but it's there to slow you down, and it's there to tell you, "Hey, stop buying 50, 100 accounts per month, and focus on just one. Slow down." that's why it's there. And if we just wanted to grab everybody's money, that rule wouldn't even be in there. It's like, well, we don't care. It's like, keep blowing your accounts. Thank you very much, right? But clearly we're trying to do something different, and we are criticized for it. But just know that it's not like the doom and gloom and, conspiracy theories, how all prop firms want traders to fail. That's not entirely true. It's a business, right? So it is a business. Is it their fault that people are full porting? No, because that's, that is what it is. The prop evaluations are relatively cheap. So you pay for leverage of 2,000, 3,000 or 4,500 of drawdown, but you pay like what, $49, $100 for 50K. That's, that's the name of the game. So you can't blame people too much, but at the same time, those people who are blowing up accounts because they're oversized, because they don't want to go down in size, they can be to blame. They're to blame just as much. So it's a two-sided street there. You can't have your cake and eat it, right? That's the old saying, and that's exactly what everybody's trying to do. Everybody wants unlimited amount of accounts. Everybody wants to full port accounts. Everybody wants lack of consequences for lack of control. But as a trader, you have to have some control, right? Maybe not be perfect, but you certainly can't lose the plot every single day and expect that somehow one day that's going to work. So I think both sides are to blame for the YOLOers in existence, but it's certainly not one-sided, right? So we need to take some responsibility for irresponsible activity in the accounts. M. Finn Mooner says, on range days, do you pick a side and wait for pullbacks, or do you try to swing? I try to swing both directions, especially if the larger time frames are also range bound. Then both sides are definitely game. If the market is more one-sided, and then we end up, like for example, if we're in some mad trending market, like we were in equities a lot, on a range day, I will actually only look at longs, for example, but that's only in cases when we have a super strong trend. Now, markets will be range bound a lot of the days, but that doesn't mean that you can take both sides all the time. However, you get a range on a daily or weekly charts and a range intraday, then yes, both sides are absolutely up for grabs for me. However, I don't look for full rotations. I only look for the middle of the range to be hit. That's my target. So wherever that hits, that's my risk reward. And usually that's not going to be 2, 3, 4, 5 R. It's going to be 1 R, 0.8, 1.2, 1 R, 0.5 sometimes. If they kind of hit the middle and then quickly go back, I'm not going to hold on to that trade. So I'm just going to scalp a few ticks and get out. I don't like range days still to this day because I think they're very labor intensive. You have to watch the markets. You have to wait for the good trade locations. And to be honest, my mental capital these days can only handle so many trades in a day. So I still dislike them. But I've gotten a lot better, and I can actually make money on range days. A little bit more difficult, and the amounts will be typically lower, right? Because it's like just scalping here, scalping there, scalping. And I don't trade with a lot of size. To me, a lot of size right now is 1 silver micro. That's like, wow, that's a lot of size on this account, obviously. So you have to scale whatever the account balance is at the time, and then make statements like, oh, that's a large size. It's not maybe a large size in like compared to the institutions, but compared to what you're working with, that's a large size, right? So compared to, whatever, like 4.5 drawdown that we have, and even now this is like up to like 7.5 grand, it's a lot, right? Really, I shouldn't even be touching silver until I get to over 20 grand of buffer. I shouldn't be touching it. That's what the risk model says. But it's a combine. So it's like, it doesn't work. Yeah, whatever. I'll dig myself out of the hole the next day. The only thing that I don't like doing is, me going back to trading 3 minis, which is what I do in my YOLO account. That I call it the YOLO account. It's not really true YOLO account. So it's got about 160 grand in it right now. And for me, trading large in that account would be like 2 or 3 crude oils. That's a lot, right? But, for example, I would never trade 3 or 4 full DAX contracts that are like 25 euros per tick, that would be too much size for me. So I would go down to, a few minis on DAX, for example. So everything is has to be scaled to the account balance you're working with. Okay, let's see. Did Joe actually post this? So let me have a look. No, so no stats from Joe yet. Or maybe, yeah. Yeah, so nothing yet. Okay. Amfin Muna says, I haven't seen your show before. What is your approach to analysis? Are you into volume, price, analysis? So ICT, SMC, I just know one of those. I don't even know what the rest of them are. So consider that I've been trading for 20 years, right? So my approach involves, let's call it 4 concepts, 4 kind of cornerstones. The first one is the supply and demand analysis on very big time frames. We're talking about technical supply and demand, looking for large areas of reversals with a large move away from it. That would be the first thing. The second thing is obviously options levels. So where are the higher open interest levels? Then we have a look at the statistical averages. So statistical average is basically how much the particular asset has moved about 10 days prior. So sometimes 14 and 40, but usually I just use 10 days before. And that gives me an idea of how much space, statistical space, we have on the day. So if it's already up at ADR high and we're getting later in the day, doing any kind of breakouts is just terrible. It's a bad setup. Someone's saying you cross the DLL every day. I don't really use the DLL. I use the number of trades per day as my limit. So I don't really know what that person's talking about. And SDES, markup, rally, and rollover, but we already did that early last night. NQ is long. Okay, we're not talking about NQ here, mate. Can you just stop? Because that's annoying. Are you going to be live until 8:20 a.m. Gold Open? No, so I'll be live for another half hour, and then you're going to have a big break, and then fast market segment. And then after that, another big break, and then power hour, because most of the team are having a break this week for 3 days. You trade volume. I don't even trade volume, mate. I use volume as a thing. You know what? You're super annoying, man. You have such a negative vibe. You obviously woke up today and decided that you are just gonna come on here and I don't know, spew nonsense. So I'm sorry, but you're going to be timed out. What if I don't want to take a payout and scale the account year after year until it meets my criteria? If you're in a live account, that's absolutely possible, and that is actually something that a lot of live traders who have other sources of income will do. You don't need to take a payout. You can grow it, but I would say pay yourself at least 20% of monthly profits. So only profits, not the entire account balance, just to make sure that you put something aside. Prop accounts are not for long-term investing, okay? So you don't want to have a crazy amount of balance in there. And generally I like to hold above 20 to 50K in prop. Anything over that is well, what is the point? What, just so I can boast that I trade with large positions. It's I've got long-term investments for that, and I trade options with larger sizes. I don't need prop accounts where I have 600 grand just sitting there doing absolutely nothing. So I like my money to work for me. So I will put it, occasionally I will put it in property. Occasionally I will put it in some long-term stocks if we have a pretty big drop. I owned some silver bars when it started breaking out from 45, and then I bought some more silver bars at 71.50. That's something to just stay there. It is in a vault, so there's none of this like, oh, I keep it under the mattress kind of thing. And then on crude oil, up until recently, I was only trading options on it few times a year. When it would hit the weekly ranges, that's when I would get involved. Maybe hold a short call a little bit longer, but then hold long calls for a few days and get rid of them, because I'm only looking for that initial pump, and that would be enough for me. But yeah, so you need to consider doing something different with that money. You know, if you have 100 grand, you know, take out 20, 30 grand and put it elsewhere. If you get up to, you know, 200 grand, 300 grand, take half of it out. You know, maybe go and buy a house, you know, put it as a down payment on a house. Where I live, properties are incredibly expensive, right? So usually you're looking at $1 million. So the best that you can do with 150K, it just doesn't go very far, is do like a down payment on a house. Now, we were in a very lucky situation where we own our properties, so obviously it's just a matter of kind of replacing the primary residence with something else. But that's always a good investment, right? So if you want to bother with like rentals, so you can maybe get, you know, a 1-bedroom apartment and then rent that out and have that be an additional source of income, but you have to do something else. Like nobody, like this whole idea, oh, let's all just get rich from one thing. Why? When it's so much easier to get rich with 6, 7, 8 sources of income. Are they easy to create? No, it takes blood, sweat, and tears to get there, and it takes years until you're able to relax. But, you know, prop income should be like cherry on the cake, or your starting point into other avenues of investing. Not something to just live off of. Because you never know what's going to happen, right? Like, I'll tell you this from experience. I was a crude oil trader. I traded gold for, like, kind of as my backup product. So I was very familiar with the metals. But crude oil was my bread and butter for, like 10 years, 8, 9, 10 years. And then COVID hit. I did amazingly well. It was my best year ever. Best year ever, right? And then the crude oil futures went negative. So what happened? They suspended crude oil. They didn't open it for like 2 months. They're like, well, we can't handle this. So what if I was just a crude oil trader? I knew nothing else. It would have taken me ages to learn about other markets. But because over the years I kept dipping into other asset classes, so I knew a lot about other things as well. Suddenly I added ES. I even traded NQ during COVID. Can you imagine? And DAX, obviously. So I didn't really care too much that I didn't have crude oil, right? But it was, you know, it was a challenging time. It's like if I was just a crude oil trader, what do? Sit around and twiddle my thumbs until they open the exchange. So you never know. That's why you need to have other avenues that can kind of see you through, and so that you also don't have to worry about money, right? To have something that is paying your bills and use the prop firm payouts for something that will matter long term. There's someone who says, you know, your investments need to eat before you do. I fully support that, especially in the beginning, right? Especially in the beginning. Low-weed Bino, who upset you? Oh, no, I wasn't upset. I just don't. So the way I run these streams, we don't allow negativity or people that are waking up on the wrong side of the bed and just starting to like spew mean stuff without any reason for it. Some people have beef with Topstep TV hosts, and they will turn up, and it's more than obvious that their only thing is not to listen, not to engage, not to, you know, chat. It's just like, you suck. Oh, I've seen your trading. You're horrible. You don't know anything. So I don't allow that on my stream, right? We want to keep it positive. We want to look at how the market is behaving around the levels that we're talking about, and then seeing if we can find a trade, right? We're not here to stand and listen to trolls drone on and on and on whilst they're living in their mother's basement, okay? So that's something when I see that, and, I allow it for a while, and some people actually stop, right? They stop. But when I tell them to stop doing that, and they don't stop, and they carry on and on and on and on, and on and on and on, and then spamming chat, they're out, right? They get at least a timeout for one day. At least for one day. But if they are extremely, how do you call it? Rude and abusive, verbally abusive, then Bruno just bans them permanently. So we try and keep, we're like teachers here. We have to keep the peace, and we have to make sure that everybody is courteous, so be kind, be polite. I'm polite most days. I can go on rants, but I generally don't go jabbing and low blows with the trolls. I just won't allow it on my stream, and it is my stream, so Yeah, Bruno says after what he's done, it should be a definite ban. Yeah, well, for now it's a timeout, but let's see if they cool off by next week. Yeah, disruptive, so annoying. Exactly, and I find it annoying as well. I'm trying to run a show. I've got bright lights in my face. I'm looking at multiple markets. When I'm trading just by myself, I focus on one market. But when you're running a stream, people are asking you questions. You have to keep jumping from a chart to chart. And, and then you get some muppet who, got up that morning with a chip on his shoulder, probably because they had a bad day. Or something, and they're like, I'm going to go and be abusive to a person on the internet that I know nothing about. But I've seen them all online, and I'm going to tell them what to do and how sucky they are. It's like, every time I lose a trade on the stream, we used to get and you can see it on the main broadcast as well. Anytime somebody loses a trade, they get a barrage of abuse. You suck. Oh, blah, 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 blah. And at one point at the beginning of Topstep TV, we even had this joke, a running joke, that every time we lose a trade, Patak would go, we suck. You suck. But it's like, guess what? Traders will lose trades. Oh my God. What do you mean you don't have 100% accuracy? And I've never claimed that my accuracy is high, because it isn't. Over 20 years, it's 43%. Do I have times when it's 70%? Yeah, but most of the time, I'm floating between 45 and 62%. That's how it is. So yeah, I do lose trades, but I also don't lose my shit after I lose a trade, so there's that. Cryptofish says, I would love seeing the dogs too. Well, I don't have many of them today, because they were a little bit noisy. So I chucked all of them out, apart from the Cavalier, and the Cavalier is absolutely ancient. He's almost 13 and a half years old. I don't know how he's still alive. He's got heart failure. He's on a lot of meds, but he seems happy. So as long as we can keep him going, that's great. But this might be his last year. It might be. I might have to prepare myself at some point, if he starts to struggle a lot, to do that horrible, kindest thing that you can do, but toughest thing for a pet parent, which is to give them a kind death. Now I'm gonna cry. But yeah, he's always there. It's just that he's mostly asleep because he's so old, and I just don't really want to bother him. So you don't see him a lot. You might hear him in the background because sometimes he snores or he coughs. So you hear. That's the Cavalier usually. JK says, I have a Newfie on my feet right now keeping me warm. Yeah, usually I have a Rimmer Bear keeping me warm, but it's getting a bit hot here. We have proper spring weather now, so with the lights it starts to get hot. So at the moment I'm not really craving a dog on my feet keeping me warm. Charles Chapman, always with amazing comments. Losses are a cost of doing business. Don't get emotional over them unless you break your rules. Exactly. So that's the only thing that matters. If you lose a trade, then get annoyed, then size up, then lose that one, then get annoyed even more. just go and, like Hogue says, get a ham sandwich, go have a walk, maybe lift some weights and shuffle all of that adrenaline that is surging through your body into an actual physical activity. Don't put it into your P&L. And look, I've tilted. Like, it's fine. It's like in combines, I'm probably a lot more aggressive. So, like I said, on my usual XFAs and funded accounts, I wouldn't touch silver the way it is now in the ranges that it has until I've got at least 20 grand in there of buffer. But because it's a combine, I was like, you know what? I mean, I can limit risk here pretty well. They smashed it all the way down. But let's see if we can find a really nice big trade on the account of the same setup that I talk about every single day. So that's the end of the Tokyo exchange. Then you have that final hour of Shanghai that usually brings a reversal. But there is usually a big sweep. So you have to expect that and then to swipe for the reversal. You don't go sweep and then try breakout, then lose that, and then jump in immediately. You have to watch order flow. At least that's how I get my good entries. So you watch order flow, you wait until like delta is settled a bit, and then you start to see either absorption. Sometimes they're like absorbing with like big bubbles on the book map and a lot of volume, but nobody's winning. And then at one point they just start to reverse that. That is the thing that I look for. And then I want to see about 3 consecutive bubbles that are mostly green, and the delta to kind of stop moving off the dead point. That is my little trigger entry from the bookmap point of view. And you can probably see that in time and sales. It's just for some reason, whenever I was looking at time and sales before bookmap, I could never see it. I know Charles said he finds bookmap a bit noisy. I've had people like that. They find it overwhelming, but I don't. For some reason, I really, really like it. So everybody's different, Oh, Jazzy says, I had to put my dog down for heart failure last year. I had to sacrifice my heart for hers. Oh, don't make me cry. Yeah, heart failure is a horrible disease. My boy had some pericardial fluid, so it's not like it's got ascites or anything, because once you get that's the fluid in your stomach. Once they start getting that, it means that the right side is not working properly, and fluid in the actual lungs. And once the right side starts to fail, it's probably time. Don't torture them, And natural death is overrated, the way I see it. It's messy. It's violent. It's just horrible. But yeah, it's so difficult. When I lost our first rescue boy, Minton, I was doing streams and I was still doing videos on YouTube. I was still pretty active because this was 2020, November 2020. I couldn't get through a stream without like bawling my eyes out. I would just be thinking about him. I would see something that he owned, and I would just be like, so, yeah. So expect some of that on these streams once it comes to Lenny leaving us, because him and I have a bit of a toxic codependency going on. Like, I'm not his favorite person. That's my husband. So he goes to him for like cuddles and stuff, but I'm like the butler, so he can't eat unless the primary butler is sitting there, and then I have to like sit there with him and just like watch him and go, because he's deaf as well, so at this point he can't hear squat. So I'm like, yes, good boy, good boy. Just sitting there like an idiot, grinning away at the cavalier. And then he kind of eats orderly, Without me, it's like he just won't eat. He starts following me around the house. So I don't know. We'll see. Maybe I'll be okay, but I'm guessing I'll be probably quite sad. The only redeeming thing about it is that we do have 6 of his children, and each of them have a piece of Lenny in them. Astrid has got his eyes. Literally, if you were just going to look at them from this point, they look the same. They all have what I call the butler paw, which is basically hitting you with the paw to get what they want. Every single one of them has that. Some of them have his ball carrying gene, because whenever he was younger, he always had to carry the ball, the chucket ball, in his mouth, and he couldn't take it from him. So we've got about 4 boys that are all doing that. So yeah, there will be a piece of him that lives on for at least another 10 years or so, maybe longer. But yeah. Oh, he's decided to wake up. There he is. I don't know whether you can see him, but he's walking around. You can see the tail sort of swishing. Let me see if I can... no, I can't see him. Hold on. The Mystery Cavalier. Hey, what's up? Just looked at me and going, go away. Display 777654 says, didn't know you had your own YouTube channel. Yeah, I've actually had it since 2015. I don't really, I've got to be honest, I don't post that much. Like, I post every couple of months. I'm actually planning to do a YouTube live stream today. So that will be at 1 p.m. Eastern. We're going to trade like the end of the day. It's a little bit more relaxed. You might hear me do a few more swear words on there, and some vaping as well, as I'm trying to concentrate. But it's a lot more relaxed, so I'm going to be doing that today. I'm supposed to be getting ready to do another sort of long form video. So those I try to post every couple of months, they are so difficult for me to create. I try, but I do have some health issues that cropped up in the last 4.5 years, and they're very energy limiting, so I can only do so much in a day before I like crash out completely. So I used to be a lot more active on my own channel, but these days one stream by myself and then another stream with the Topstep crew where I don't have to talk for the full hour is just about all that I can handle. If I have to do more, if I have like 3 appearances in a day, like let's say I'm on Fast Markets, group coaching, and obviously this show, you don't want to know what I look like after those. It's like literally, I immediately take my makeup off, put my hair up in a bun, and I sit in my like little mobility chair and start riding around like a Bond villain because my legs stop working. So that's fun. But it's, I'm still trying to record a video that talks about a concrete problem or, a particular setup. And the next one, I think a lot of people want to know about failed auctions. And a lot of people want to know about initial balance. I have mentioned it before, kind of like contextually, just like how to use that. But I think it's time that I create like a dedicated video that's only going to tackle that. So, yeah. So, yeah, I do have a channel. It doesn't grow much because obviously you have to post very frequently. And because I'm a legacy channel, YouTube algorithm also doesn't like me very much. So, if you are on my channel, then any sort of engagement, comments and stuff, that really helps. Otherwise, and my videos do pretty well. Like, I'm not going to say, I only have like, 18,000 people. But they're genuine people. I've never bought YouTube views or YouTube, subscribers. So, I'm just growing super slowly. I post when I can. And it still has a lot of value. And a lot of the videos have very dodgy lighting because I was doing them in my old house when I just couldn't deal with the light. Like, it was so difficult to control the lighting. So some of them have like a dodgy green screen happening. And then some of the more recent ones obviously have this kind of a setup, which is very pretty. So I do want to create content. It's just like one video that's long form takes me about 2.5-3 weeks to properly do, especially if it has like a vlogging component, which I know that people enjoy a lot. All right, so crude oil is going towards this Asia high. So here's another thing before we leave the stream. No trades today on stream, but if London creates a higher high than Asia, that will become a new reference. So during NYMEX, after the first sort of half an hour, then that becomes an area for a potential sweep and a reverse. If that happens to align somewhere with this ADR high, all the better. Just be careful, because at that point we're so close to this 80 area, which is a mega call wall. It is a magnet, so they might just swipe it all the way into 80 before they start to reverse it. But ADR then on the other side does become a reclaim potential, so we fall away from 80 eventually fall away from 78.92 and reclaim ADR to the downside. Yeah, so that's kind of the OODA loops, the OODA loops: observe, orient, decide, and act. And that's how I stay on my bigger trades. I always have a reference point. If we hit it and then start to react from it, I will close it. Once I'm in a larger swing position, I just leave it and I watch it every 30 minutes. I don't go down to a 5-minute chart. I don't care about low time frames. Don't really particularly care about order flow at that point. So I just literally stay on a 30-minute time frame and try to stay in for as many hours as possible. Not easy to do for most people. But if you ever wondered how D can stay in trades for 4 hours, that's how. So larger time frame, not looking at it tick for tick, just coming back to the chart every so often to see what's happened. What is a mega call wall? Mega call wall is the area from the options interest where the strike has a lot of volume. That's the simplest way I can explain it to you. So there's a strike. And if I'm calling it a mega call wall, it means that it's got like bazillion contracts sitting there. That's referred to as open interest because they're not necessarily actual positions, but that's where people want to be in. Those areas are used by dealers, by the market makers, to do their intraday hedging in order to stay delta neutral. They don't care about speculating on any particular direction. They just want to stay neutral whilst they're providing liquidity for the rest of us, okay? And these mega call wall, moderate call walls, double-sided areas, they're all game for dealers, right? So that's where they do most of their hedging. And how the hedging looks also depends on whether you are in something called the positive gamma or negative gamma. Positive gamma means that we have gone over an area where gamma exposure is kind of above zero, and then negative gamma is when it's negative below zero, right? If it's negative, expect spiky price action, and also expect that some of these mega call walls, mega put walls, they will actually act as accelerators and prices will run straight through them. Why? Because in a negative gamma, dealers hedge with the direction of the movement, because they are presumably, like let's say this mega call wall, you presume that the dealers are effectively short calls at that point. So as long as the price is underneath it, they're good, right? They don't need to do anything. But as soon as the price starts rising, they actually have to buy outright futures in order to offset that. What does that do to the price? It accelerates the movement upside. Does that make sense? I think I explained it pretty clearly now. When it comes to the options, you probably won't get to a much clearer explanation of that. Takes a while to get the grips with it, but once you understand how the dealers operate, you're like, okay, I see, I get it. And everything becomes less mysterious. You're still going to make mistakes, and you might still tilt, but at least the understanding of how the movement happens intraday should dampen the fear and the reactivity around losing trades. All right, so I'm going to end it there. There's another couple of minutes we can hang here. Neil Tana says, do you see it hitting 80 today? I don't see anything. I'm just looking at the current price action. Could happen, may not. I don't know, but that is where the magnet is. It would mean overshooting ADR by a little while, so it's slightly outside of the statistical averages, but not impossible, right? It's not that far out. If we were down here at like 72.50 and somebody's asking me, do you see 80 today? I would say no. But it's anyone's game. You know, this is now within 260 ticks. We had a day where crude oil was trading like 700 ticks. So it's possible. But trade what you see in front of you right now. So do we have anything here? No. We have Asia high. Lower down we had the moderate call wall. Is the time of day right for this to reverse middle of nowhere? No. So the one thing that I want to see as a high possibility is that London goes above Asia, creates a London high, and then I can use that as a reference for another maybe sweep into ADR high, possibly even 80, before I look to fade it. Will I do another short from Asia high? Probably not. But you never know. If we fail the auction for NYMEX, so we create the initial balance somewhere around there, try to go higher, then fail the auction, then yes, I will run a short. Right now, I don't actually have any particular setups. So let's wait to see what crude oil does. Keep in mind that the storage did note quite a big build. We had over 6 million crude barrels in surplus. So that is a little bit contradictory with the risk off side of things in the Middle East, which should push oil higher. It really depends how much focus the market participants are going to give to the Middle East conflict. If that's all they're focusing on, storage, it just does not matter. So in that case, we're going to go higher. If there's no particularly earth-shattering news on the Middle East, everything's kind of still happening, it might be that they shift their focus to the surplus and storage and then start to run it back down. But at the moment, this is what we've got. Those are the levels. 75, still an orientation point. Potential for 80. Statistical average, let's say around 79. And Asia high, currently right around 78.11. Those are the levels. All right, that is all for now. Sue says, thanks, Deeyana. I love having your stream at the new time. Thank you, Sue, for being here with me. And she says, I was never able to watch you live before since I'm on the US West Coast. Love to wake up with your insights. Thank you. Thank you. And welcome. Welcome. That's all I have for you today. This was the metal markets. Like I said, most of the Topstep team are out for a well-deserved break. But you will have past markets and you will have power hour. So give it about 75 minutes or so. And then you're going to have more Topstep TV coming your way. Until next week, I will see you on Monday. Have a great weekend and be very careful tomorrow with the NFP Friday. Let's see what the day brings. Take care.